Good morning, Osman. We have been hearing the term fintechs versus bank for a long period. And we all know that the fintechs has been creating a fair bit of disruptions in the financial industry. What do you think have happened and have caused the emergence of a fintech?
Thank you. That's a good question to start with. So firstly, let's take a step back. Where is this fintech came about? Fintech is very popular nowadays, but if you just look back, it's a finance and technology. Now, this technology coming into the financial sector is nothing new. If you look at in 1950s, the credit card came in. In 1990s, we saw the emergence of internet banking. And then millennium, we start seeing contactless payment. So the technology has played a role in the banking or financial sector from long time. So if you just give an example, go to Google and do a search of fintech, you cannot go probably 10-15 years. There's nothing exists called fintech. So that's probably is why the younger generation are talking about this fintech. But all I'm trying to say is technology has always played a role. So that's more about the technology playing a role. I would say that there are three core trends that has actually contributed. So obviously the technology has helped in terms of the customer reach. So traditionally the banks always had a customer reach or distribution touch point, which were those branches. So now those fixed assets are no more required. You are still able to reach without having a bricks and mortar presence. And I give you an example. If you look at in Europe, the two largest banks or disruptor banks are Revolut and N26. And they have got huge customer base without any physical presence. So that tells you that it is the technology which actually helped to digitize or virtually process complex operational jobs, which typically bank used to get done through physical human labor. So that I think has played a significant contribution. Second, I would say the internet connectivity. If you look at smartphone and the computing power has played a significant role, because today when you say virtual banking or digital banking, what does it mean? It's your internet, it's your smartphone. And those devices, connectivity and network, allows you to do all these things. So, and also the speed of which people can process or the devices can process, that allows things to be catered through various back-end automated solution. So I would say that mobile data, smartphone has pretty much in last 10 years or 15 years has enabled that to happen. Second, I would say the customer experience. If you look at customers have become very aware, and they're getting in other industry a lot of automated solution. So as a result of that, customer expectation is now to get things by 7 by 24. So things that were nice to have, they are saying it is a must-have. So this is where the customer experience in other sectors that they're getting are also demanding in the banking. And people have become very busy. So they want to get things done without any human intervention. So that played another big role in my opinion, the experience and convenience. Like I said, convenience and price. You can offer a product much cheaper because there is no human intervention digitally, which is also contributing. And third and last, I would say the regulation. If you look at banking industry being there for so many years, has been highly regulated. Citi, as an example, has 30,000 people looking at regulatory compliance. So there was a barrier to entry to get into this sector. Now it is getting distributed. Fintechs are able to offer and who are yet to be regulated that way. And I do think, like we saw with what happened in China, that the regulation came in to clamp down. So I think that is another reason why fintech did so well and growing exponentially.
So with the rise of the fintechs, what do you think that fintech have been able to provide that the incumbent banks have been struggling to provide to the clients? And how do you think the banks have responded to the fintech disruption so far?
So I would say that historically, banks have lagged behind fintech companies because there are three things: personalization, customer experience, and innovation. So when you talk about innovation, fintechs don't have a legacy. They can just go ahead and deploy new technology. And it is a new environment where you don't have the huge infrastructure, people, and process that can hold you back. So that culture of innovation is very easily adaptable in the space of fintech. So I think that's one. The second, I would say, the speed at which the fintech can personalize individual need. I think the traditional banks have a challenge there. And the challenge is their infrastructure. Their systems are siloed, product centric. So how do you move from there? Not that they don't have the resource. It is the speed at which they need to move. It's a huge struggle. So that I would say the customer experience, and the third, personalization, which I spoke about, and the innovation. These are the three things that in my mind makes fintech stand out, or the banks can't compete in that space. That's pretty much the reason why I think that fintech has a competitive edge.
And how do you think the banks have responded to the disruptions of the fintech so far?
Yeah, so if you look at two things are needed, the ability to change and motivation to change. So if you measure this, I don't think prior to fintech there was any such need or motivation for traditional banks to change, because it's very regulated. You are pretty much making good revenue, good margin, and there is no threat. So why should I change? But on the ability side, they had everything. And one should not underestimate the power and resource these banks have globally, which existed 100 over years. So I think that is a big differentiator between ability to change and motivation to change. Yeah, so I would say that played a significant role.
Yeah. So why do you observe any of the banks that have responded to the fintech's challenges rather optimally, or do you see a difference between how the banks have been reacting in terms of the incumbent banks?
There are three models come to my mind, okay, that are being tested now. One is that you try to change your own culture, your own motivation, you invest and try to change the infrastructure to get it done. So which is in-house. The other is you invest, meaning to say you set up a separate company. And we have seen like Standard Chartered has done, as opposed to what DBS is doing. DBS went on changing their own organization, which they have done quite successfully, I would say. Standard Chartered, on the other hand, has branched off and created a separate vehicle to launch. The third, which I think is very powerful, is about ecosystem play, which is you don't need to do it yourself, but you create platform and partnership. And I think that's a very smart way that you can move very quickly, which means you just create services by various players and connect them and make it accessible and seamlessly with a very good pricing without you being responsible to do everything by yourself. So it's a distributed model, but it works fantastic. Now time would say that whoever wins the race, I think the key thing that I would say is about customer. If you are able to remain customer centric, anybody would make a big difference. If you lose that sight, it doesn't matter which one do you follow.